Good morning, traders. Hope everybody's doing well today. This is Michael coming to you from Gamma Edge on Thursday, September 18th, with our pre-market prep session. As always, here at Gamma Edge, we'll cover our three pillars: sentiment, structure, and trend. Let's go ahead and jump right into it. We have a lot of data to cover today, obviously post FOMC, and kind of how the SPX option structure looks. So looking currently at our market trend model, obviously based on the tick index, if you've followed us for any amount of time, get you orientated really quickly. The bolded white line here is our intraday instantaneous cumulative tick. Tick is based buying versus selling in the overall market. Yesterday, after the FOMC decision, we still continued to see the tick degrade to the downside. So this is kind of an interesting development as we saw price run up quickly and then basically back down and consolidate. But there was overall selling into the afternoon, into the close, even after the rate decision. So up here, breadth indicator, new highs versus new lows. New highs obviously still outpacing new lows, indicating more stocks are being bought. But our filtered cumulative tick indicator, plus 1,000, minus 1,000, larger block orders, institutions, larger market participants, still continue to the downside post FOMC. So we'll see if this spills over into today and see if we have some selling after the gap up. It looks like we're already pulling back from that 66.50 level. So we'll watch this intently. If you're a bull, you obviously want to see this turn back to the upside and cross our shorter term moving averages, momentum moving averages that we refer to as the railroad tracks. That would indicate more buying versus selling in the overall market. Our colored ribbon, red above cyan, this is our longer look back period, still looks intact and bullish for a longer term uptrend. But this is cautionary as we head into this morning. More selling yesterday than buying into the overall afternoon. Moving on to our quality tick RC. Again, same thing under the shorter term moving averages and was moving to the downside into the close yesterday. So again, this is a kind of a yellow cautionary light for us heading into today on this large gap up. Again, red above cyan, colored ribbon, everything is bullish there. So we'll watch this as we go into the open. And two scenarios: do we continue to see selling into the open and a pullback down towards some key levels we'll talk about here in a few minutes, or do we see this turn back to the upside and buying really quickly? And this matches a few other tools that we're watching, so we'll go over those here in just a few minutes. SPXA, so SPX options complex, obviously largest, most notional value. This gives us the greatest view of market participant positioning of the options complex. We separate it in the SPXA as well as the SPXP. This is the SPXA. This is our cruise ships, obviously our larger boats that steer the overall direction of the market. All expiries turned on as we head into the monthly OPEX tomorrow. Call dominated above and below spot price. We see 29% here of the GEX will expire tomorrow. Again, net call dominated, net deltas green, up and down the overall complex. So really no change here after the event. Again, support as we're along, as long as we're above the overall transition levels. 6,600 is that large round number, significant net delta there that we could see a pullback to that we'll be watching intently. Then 6,650 is what we tested this morning. Above 6,650, we think we have a path towards 6,700. Obviously, probably not today, depending on what the market participants are speculating, but we'll watch that. So that is our 2 points of reference for today. SPXP, this is our speedboats. Obviously, these contracts turn over much more rapidly, so this is your 0 DTE. And then with our web app, you can click these tiles on and off and click through the expiries very quickly to see which ones are watching, see if the overall structure changes. Call dominated above and below spot price. Implied open was 66.54, but we're pulling back from that. Again, pull back to 6,600 would be not out of the game or not out of the realm of possibilities, and that would still be very bullish on a pullback for the overall structure. So again, we'd watch that GEX and DEX transition, top of GEX and DEX transition there. Again, net delta is green, up and down the complex, so any pullback should be an opportunity to get involved unless we see a large change in the sentiment structure or the MTM continues to weaken to the downside. Moving on to the SPXP GEX ratio. This is our gamma edge ratio. Again, this is basically a put call ratio, but we add a gamma component. So this is short dated call gamma versus short dated put gamma. With the move in the overall market yesterday, we still saw or are observing a positive slope within the overall GEX ratio. So again, this is indicating short dated call gamma is larger than the short dated put gamma. So you want to see this for anticipation of market appreciation to the overall upside. Again, staying above that 1 level gives the bulls the benefit of the doubt and the edge to the call dominated call speculators to the upside. So we'll watch this today to see if this turns to the downside, depending on what the SPX spot price does. This is price sensitive, so if we continue to move down, losing some of those in the money calls and out of the money puts would be captured. So again, that would change that ratio to the downside. But again, remaining above 1 is bullish, and we have a positive slope. So bullish here with any move in the structure to the upside. We could capture some of those out of the money calls, obviously adding to the overall ratio to the upside. All right, let's move on to the delta balance. We separate the left-hand plane and right-hand plane. So basically, this is the delta above spot price and below spot price. So above spot price would be the green dotted line. That's what we call a right-hand plane. Below spot price would be the left-hand plane. Left-hand plane is your in-the-money calls or out-of-the-money put speculation. Right-hand plane is your out-of-the-money calls or in-the-money puts above spot price. So we continue to see a slight negative slope in that right-hand plane. So that's your out-of-the-money call speculation is not necessarily present or degrading a little bit. Left-hand plane has a positive slope, so in-the-money calls are still very well entrenched. So as you see, we're above the zero line on both of these. Aggregate delta balance is 1. So again, that is bullish and call dominated within the overall structure. On out in time, after OPEX, we do see the right-hand plane start to advance with these multiple expiries, 22nd, 23rd, and 24th. So again, moving away from the zero line, indicating out of the money speculation, returning back to the complex. But then conversely, we see the left-hand plane dropping slightly down to the 0.5 level. So that is your in-the-money calls or out-of-the-money put speculation to the downside. Again, this could be through expiry or a spot price moving up and down the overall SPX structure. But this is the projection as of now as an instantaneous snapshot in time of how market participants are positioned. Again, aggregate delta balance at 1. That gives the edge to the bulls as long as we're above 0. So again, call dominated, bulls edge here on GEX ratio as well as delta balance. Moving into the SPXP net stat command, this is our highest sensitivity levels heading into today. So as we've already discussed, you see the in the money calls, out of the money calls on the net delta. So that leads to our call dominated stance. As you observed in our web app, net charm in the money calls below us, these will continue to be supportive. Out of the money calls above, these will continue to be an overall headwind as long as we're between these two levels. Net gamma, as long as we're above 6650 in the money calls here. Out of the money calls 6700. So again, if we're below 6650, opportunity for the gamma to provide a move towards the downside. Again, not significant though, and you see the net Vanda there at 6600, and then that 6700 out of the money calls, in the money calls. So again, as long as we're between those two levels, net Vanda will not have as much exertion of force within the overall structure and complex. So key takeaway, in the money call dominated, even on any pullback towards 6600, which definitely could be an area that we watch. Top of the drunken sailor range, which we'll talk about here in a minute, we think will be extremely important. Let me grab my 0DT chart real quick that I forgot to grab this morning, so we can go over the overall structure. Give me 1 second here. Sorry about that. Again, thanks everybody for joining us. Make sure you like and subscribe on YouTube. That way you'll be notified when we go live with content, and we'll be able to provide intraday updates as well as post-market recaps. All right, sorry about that. Forgot to add this to the overall slide deck this morning. So okay, so back with us here on the 0DTE. So you can see the drunken sailor range. Obviously 6590 towards 6620, low exposure area. Where we will be driven by intraday volumetrics and market participants pushing price around. Pullback to 6620 this morning would most likely be that first area where we'd see some supportive type action. To the upside, we see COTMC and PGEX up there at 6650. That's where we've already tested pre-market. So again, that will be that key area that we'll need to see a large amount of volume to overcome that peak. And then pull back towards the GEX and DEX transition. These are our blue boxes. and gray boxes here. Again, that would continue to be supportive as you've seen on the net stack command, as well as our other tools, as long as we're above those levels. You do see some out of the money put speculation right below the overall transition area. Again, that could be some opportunistic put speculators for a move to the transition area or under the transition area. And then most likely we'd see some monetization unless we see some out of the money put speculation via our intraday vol metrics. And then we'd look for a little bit more weakness down most likely towards 65.75 and then obviously 65.50. Not really expecting that at the moment unless we see a large shift in the selling as well as the SPX structure and sentiment. The first area most likely would be a pullback to drunken sailor range 66.20. We'd look for an opportunity to get long that area. If this stabilizes into that area within drunken sailor range, choppy. But we'd also be looking for a pullback to 6,600 for an opportunity to get long that area also. Bottom of drunken sailor range, confluence of GEX and DEX transition, and some peak areas there where we could see a price pullback. So let's move on to our trading view chart. So we're already testing the top of drunken sailor range this morning, where I talked about, again, this will be a key area to hold and look for a long back towards 66.50. If we would drop into the drunken sailor range, then we increase the likelihood of a pullback down towards 6,600 and these transition areas. And then if we're below the transition area, obviously we get a little bit more cautionary and negative as we can enter a little bit more environment that could see a little bit more weakness. If we capture those out of the money puts become in the money, then we could see a pullback as we discussed down towards COTMP, which would be 65, 74, 65, 75 within the overall structure. So we're really going to be driven by the intraday volume metrics after this pullback this morning. Obviously, it looks like some profit taking on the gap up. And again, my cautionary stance on the MTM still continues, so we'll continue to we'll watch that at the open to see if this turns back up, or do we see some continued weakness on the market trend model, indicating we could see that pullback towards the 6,600 level that we've already been discussing this morning. Moving on to some individual equities, obviously significantly gap higher in a lot of the individual equities, testing the top of the overall structures and ranges that we discussed. Again, our mechanical portfolio is based on a move from P-trans to P-GEX. So as we start testing those plus GEX levels overhead, Apple, for example, here you'll start seeing some monetization and pullback most likely. And we're kind of seeing that across the board. We're just gapping very far away from the overall option structure. So this leads to some kind of what we could call frothiness, most likely some profit taking on call speculators that have been putting their capital at risk and are receiving a large reward this morning on a large gap up. So again, not out of the realm of possibilities to see some profit taking after this large gap up and then pull back to key levels. For us, it's P-trans and zero GEX and transition levels. As long as we're staying above those, we'll stay in a more positive gamma call dominated structure, and those will continue to be supportive. If we do start seeing these individual equities as well as the overall SPX and individual ETFs diving below the P-trans and zero GEX level, then we'd change our stance and move to a little bit more cautionary, possibly looking for a little bit larger pullback towards the NGEX and in-trans level. So thanks for everybody for joining us this morning. I've already posted a SPY this morning, tested that plus GEX area at 665, and then I started to pull back right around that 6650 with the SPX area. And then now we're heading back towards key areas of the top of drunken sailor range, as well as COTMP. Out of the money puts go in the money. We're in the overall complex for SPY, and that's historically where we see some monetization events. So hopefully that helps everybody to navigate today. Again, I would say less is more as we navigate the post FOMC option structure and we head into the monthly OPEX tomorrow. Everything looks very supportive. MTM is our only large cautionary flag, as well as the delta balance, that out of the money call speculation starting to degrade just slightly. Again, not necessarily a red flag or a sell everything type of event, but just understanding that upside appreciation could be dampened a little bit today after this overall gap up and pullback from market participants. So we'll just see how the day unfolds heading into the monthly OPEX, and we will try to join you midday and kind of see how the overall structure, market trend model, and complex is looking. Yeah, can we look at plug? Yeah, let me take a look at that. I think I have the overall. Let me pull up our web app. Make sure you join us at GammaEdge.us. Sign up for all of our newsletters, as well as join us in the Discord 14-day free trial. All the tools turned on. We'd be happy to help you get up to speed and navigate the options complex and structure, as well as individual equities. Plug. All right, so we're call dominated above and below spot price. Let me look at the monthly OPEX here. Very low price stock. So not one that we would necessarily trade within overall Gamma Edge. A total OI does have enough OI to exert the dealer metrics. But then after this expiry, you see that drops to 9,000. So very low OI there. So the structure really is not conducive of speculating on out in time. And again, a very low price stock, $1.50 to $2, not something that I would be looking at to trade the overall web app. We prefer larger cap stocks under larger dealer control. A $2 stock is, very speculative, I would say. I know Plug has been a stock that's been within the overall or trading environment for quite a long time, but low price stock really doesn't lead to a good overall view of how the speculation is occurring. So NBIS and QBT, I'm not really familiar with those TT, so we'll look at them. NBIS. Okay, so call dominated above and below spot price within the overall transition. Transition's very wide. This leads to uncertainty and congestion within the overall structure. You see PGEX up there at 100. So most likely that'd be an area if we did see a larger move to the upside. Top of transition area, need at least to get above that for price appreciation to be in a little more call dominated positive gamma structure. And then once we move after this OPEX, our OI drops pretty significantly. I'm really not familiar with this ticker, so I'd prefer that you look at larger cap stock tickers. Not saying this one can't be traded with our overall web app, but that lower OI doesn't really lead to having confidence in the speculation of the overall structure. So hopefully that helps. QUBT, I would assume, I'm not sure what sector these are in. I'd have to look. So call dominated above and below spot price. Above the transition level, you see PGEX at 1900 in COI, or sorry, $19 PGEX COI. So price appreciation most likely dampened, not a significant upside there. And then after this expiry, structure does move up to 21, but OI drops very significantly, obviously weekly expiry. So again, you want to see this OI level continue to increase after the overall expiry, just indicating that there's speculation and structure available for dealer metrics and dealer control that will be a little bit more conducive of you placing structured base bets. But the transition does, or the structure does move up. Looks like speculation up towards the 21 level. So again, I'm not really familiar with these stocks. Obviously, I'd have to look into what sector they're in. And 1017, yeah, so 1017 structure still remains at 20, so really doesn't advance very significantly. Call dominated though above and below spot price, so not a significant advance in the overall structure to the upside. Fold, okay. Fold doesn't have enough OI to exert in our dealer metrics, so sorry about that. Yeah, I mean, as you can tell, let's just talk about this for a minute. As you can tell, we really want these larger cap stocks under dealer metric control. So again, we've spoke about this before, but the OI above 100,000. So as you click through these expiries, some of these expiries will exert less or have less speculation within the overall structure. So if all of these are on and we have a total OI of 367,000, it's great, right? It's above 100,000. We have a set filter that's already set for us to include in our overall universe, which is 100,000. But then as you click through the expiries, you see the OI drops significantly, right? So again, certain OIs may exert more force than, so 1017, obviously that's a monthly expiry, so that exerts more force in the overall structure. So I would say if you're using our web app, I would base my overall speculation on these expiries, than these individual weekly expiries, right? Because these weekly expiries with these low OI are not necessarily exerting the overall force that you want to see. I mean, this weekly expiry only has 4,000 OI contracts. So really this structure is not going to be exerting force on the overall price action and price movement and speculation. So hopefully that helps everybody. And that's why we really want to see, as you click through these expiries, you know, compared to like an NVIDIA, obviously it has, you know, weekly expiries, you know, it's 20 million OI, right? So if you compare that to the ratio that it's exerting on the overall structure and you know, force of the overall price action, it's significantly higher on NVIDIA compared to what I just looked like at QUBT. So I'd rather trade NVIDIA. I'd have much greater confidence in looking at a structure moving up or down where the transition levels are than in QUBT or those others that have very low OI. So hopefully that helps everybody understand that you know, why we look at larger cap stocks, why our main focus is on the Mag 7, as well as those stocks with significant OI, as well as the ETFs, SPY, Qs, IWM, you know, GLD, gold. So yeah, so do you see any correction coming next week given the expiry tomorrow? So Ash, I already went over those our key tools that we're looking at. Delta balance is one of those. This is projected on out in time how market participants are positioning above and below spot price. With the overall option structure, delta balance remains at 1 after this expiry. Again, this is spot price sensitive. Could change if we see a larger pullback. Our GEX ratio, this is a short dated call gamma versus put gamma. Positive slope to the upside, indicating short dated call speculators are still maintaining overall control. And then what we would do is we'd go look at the option structure via our web app. We'd take out this expiry. And then you look on out in time, which I can do very quickly. But this is call dominated above and below spot price in the SPXA. So again, institutions continuing to maintain their speculation. And then you look at the SPXP, all expiries turned on after this expiry. Again, call dominated above and below spot price. Nothing really changes with that. So AMD, we can take a look at that one. So call dominated here. I was looking at AMD actually yesterday. It's been showing some weakness out of the money put speculation. So we can remove, we can look at next expiry, call dominated above and below spot price. But you do start to see a significant amount of this out of the money put speculation to the downside. But obviously short dated call gamma is still overall ruling. But we're changing some of this from green to red. So this may be a little bit more weakness creeping in out of the money put speculation to the overall downside. So I can take this one out and then I can invert. Oops, sorry, invert. Select all, take that one out. So to take this expiry out, and after this expiry, we remain call dominated. What's nice about the web app is you can actually click on multiple expiries after this expiry, and you can go on out in time for a week. Yeah, we'll look at the DBH for AMD also. Call dominated, again, above and below spot price. We're below transition area. That's key, though, so peak XCOI at 170. But we're seeing these out-of-the-money put speculations start to come in here. So this is probably opportunistic puts looking for short-term weakness. Again, these would be areas I'd look for the downside, and then if we do see some monetization, back to the upside. But you want to be above transition and in a positive gamma call dominated structure to have price appreciation. So right now, just a little bit of weakness creeping in. I'd watch for transition areas to be the area that you could see some stalling. If you get above transition area, then speculation to the upside could continue to increase. Let me run the DBH chart for AMD. And I'll pull that over for everybody real quick once that runs. So again, GameEdge.us, sign up for our newsletter here, put your email in, and you'll be delivered the weekly newsletter on the weekends, and then free courses here. GameEdge FastPass is our options flagship course. Sign up for that for free. All right, so here's, let me get the interactive chart so I can, so all of our charts are interactive here at GameEdge, and you can scroll over. So again, AMD, so short-term weakness here, just kind of what we discussed, out of the money call speculation degrading. And then you see the left-hand plane diving to the downside. So this is below spot price. So that's out of the money put speculation that I discussed. Again, moving to the downside. So we're seeing that same overall look in the web app. And then the delta balance obviously driving down towards zero. So again, that's the aggregate left-hand plane and right-hand plane. So again, that's weakness creeping in, short-term weakness. And you see it bottom here, basically on the 26th. This continues on a trajectory, and then we start seeing this move back to the upside. Out of the money speculation comes back in. So for me, looking at the web app first, understanding what the structure looked like, that most likely that out of the money puts speculation was coming in, and then matching that with our delta balance just gives me much more confidence. I mean, so this is basically just looking at the web app and understanding what is occurring in these next expiries, right? And just giving you an overall in-depth view and separating those above and below spot price. So this is basically saying that AMD probably is going to see some weakness, and we already saw that. It was below transition, and we see the speculation to the upside degrading, and this is the downside increasing. So again, not saying AMD is going to crash, but most likely you're probably going to see some short-term weakness in AMD, at least on out in time. This is the 19th, and then this is to the 26th here, which obviously is the next expiry for AMD. It has weekly expiries and not daily expiries. So we'll continue to watch that. Hopefully that helps on AMD. So MU, I'm still working on understanding the web app with the first profit taking area be 165. Let's look at that. Sai, I did share that for SPX. You can scroll back. I'll pull it up here in just a second. Yeah, DBH chart. We'll go over it here in just a second. I got about 3 more minutes here. Yeah, so MU. Yeah, no problem, Sai. So MU. So with this expiry, we see PGX at 160, right? Spot prices above that. This historically is an area where we see profit taking into PGX level unless the structure continues to advance. COTMC would be that upper level. Those out of the money calls go in the money. That's where most likely you'd see some profit taking area. But PGX is usually that first stopping point. You see it's at 160 and we're above transition. So I would anticipate some profit taking at least into this overall area. 170 would be the cap on price. So after this, 170 continues to be PGX, and we see COI jump up to 190, and then actually transition drops and becomes a little bit more narrow. So that'd be something, I think it drops, let me see, 152. Yeah, so transition drops slightly, and then you're above transition. So again, supportive environment. But for tomorrow, this kind of 160, we're above PGX at the moment. So I'd anticipate some profit taking. 170 would be that upper level that most likely you'd see profit taking. Again, unless the structure advances, but that's only 1 day expiry. So I would not anticipate the structure to advance significantly to the upside on that. So hopefully that helps, Mosey. All right, well, the delta balance for the SPX, here it is, Sai. Again, right-hand plane, we're seeing that out of the money call speculation degrade slightly. In the money calls, well entrenched and supportive, delta balance at 1. Everything still looks bullish on pullbacks, and I would assume most likely we'll probably see a pullback, and we're already pulling back towards the top of the drunken sailor range. If we're in the drunken sailor range, we'd be looking for 6,600. So, all right, thank you everybody for joining us. I love the interaction. Like and subscribe on YouTube. Share our content, please. Like and subscribe on X. You'll be notified when we go live. And if we post individual equities this morning, one of our other team members, Taylor, that you see on here sometimes, does our swing game plan with individual equities. So you may see some stocks posted this morning. Everybody make it a great day. Make sure you manage risk heading into the day, and we'll see you later. Thanks.